Good day, everyone. Thanks for joining us here in the charts. This is the market beast, Napoleon Macro. So let's take a look at gold. A lot of uncertainty in the gold market. Some saying this is a bear market, plummeting prices incoming. Let's go ahead and step into the market to see what's actually going on. So I'll give you my assessment here in this hopefully short video. So welcome back, loyal family. If you're new here, we explore price action only. Welcome in new subscribers. Let's go ahead and dive right into what I'm seeing in the charts and if we are actually, in fact, headed towards some murky waters in the gold market. And we'll see that in the charts here, shall we? So today's August the 11th, 2021, and the current price of gold is going to be $1,751.50, slightly positive 1.3% for the day. Okay. All right, so welcome back, ASMR. Interesting analysis. Remember, this is not a recommendation for you to buy or sell gold or do anything other than enjoy the sound of my voice, actually, and just, educational piece here. Okay. Here's a chart. Okay, that's one part of the chart, and we're also going to pull up our Bollinger Bands, monthly candles that we're taking a look at, okay? So as of recently here, we've been following just kind of this like falling wedge, not a falling wedge, but that kind of bull flag there. I'll just circle it so you can see what I'm talking about. I mean, it's pretty obvious on the screen there, that right there, but we're going to get rid of that for now. We're actually going to take a look at the Bollinger Bands and focus on what has a potential to take place next. Now, this red circle represents a breakdown below this orange line. If you don't know anything about Bollinger Bands, I'm not an expert, but you see the blue lines, kind of the outline blue lines, and then blue lines there, kind of the outer lips, so to speak. And then the orange line in the middle is kind of the mean average line in between, the perfectly aligned in between the two blue lines. And what happens is most of the price action takes place within the two blue lines, whether it's above that orange line or not, but typically most of the price action takes place within those two blue lines, okay? Now, the important thing to understand here is this red circle represents a potential breakdown below the orange mean average line in between the Bollinger Bands. And I just want to kind of show you, let's go back in history so that we can all be clear in terms of what happens if the market breaks down below that orange mean average line. Now, I'm not sure if the title suggests this has not happened ever since December 2018 on this monthly candle here, like December the 3rd-ish, 2018. But the green circle represents a successful break above the mean average line, aka the orange line on the Bollinger Bands. And once the market breaks above that orange line, the mean average line, you can call it a support line, right? It simply found support and, of course, had a really nice move to the upside for a few years there, about 2 or 3 years, reaching as high as $2,000 for an ounce of gold, okay? But, of course, the market actually closed a bearish candle outside of that Bollinger Bands, and ever since then it's been moving to the downside. So right now the market is kind of hanging off a cliff, so to speak. But I want to show you some evidence in the chart that suggests it's not time to get bearish on gold just yet, because this has happened in the past. And it's also been a fake out. But if it is official, we may be looking at something like this. Let's kind of zoom in here. If we go back in time, all the way back in February 2013 at this little area right here, the red circle. And notice what happens if a monthly candle closes below that orange line. Yeah, it's not friendly for the bulls there, guys. So if we do get an official close below that orange line, we should expect to see the buyers at least making a bullish counter move attempt to break back above said support or said mean average line within the Bollinger Bands. Or, of course, in this case, we may be up for some pretty substantial, retracement to the downside. In fact, let's just go ahead and measure how much of a percentage decline happened when the market closed below that mean average line, and it kind of bottomed out over here in January 2016. Okay, I think it was pretty severe. Yeah, you're talking about a 36% decline in the gold market. I mean, that's pretty substantial, I think. And how long did it take? Let's do that measurement as well. It took about 1,033 days. So, I mean, again, guys, these markets, they take some time to move down. All right, a lot of trillions of dollars in the gold market. Let's look further back in time and see, has there ever been a fake out? Has the market ever closed a monthly candle below that mean average line and then it popped back above that mean average line to fake out or trap the bears and continue the momentum to the upside? If we take a look at here, this red circle, you'll notice this is an example of a fake out. Okay, it's a simple support line, a mean average line, right? Where the market closed a red candle October 2008 below that mean average line. But on the very next candle, okay, we always go over this on the channel. Fake outs consist of the very next candle, okay? In most cases, sometimes it's different, but in most cases, okay? The very next month, boom, right back above that mean average line, and the market continued the overall trajectory to the upside, okay? And of course, if we just kind of back out and you could just kind of briefly scan over, and you'll see that the market monthly candles stayed perfectly above that orange line. And of course, it started here all the way back in September 2021, breaking above that mean average line on the monthly, again, monthly candle. This is the big stuff, guys, not that 1 hour stuff, okay? Finding support and finding beautiful support, continuing to thrust to the upside with the exception of one fake out that we just showed you an example about, that red circle. And of course, the market continued higher. So yeah, so in a nutshell, this 1783 level, I don't know if I even explained that to you guys. We dedicated a full video specifically talking about the 1783 level. It is the most powerful level in the gold market for the past 12 years, okay? And I say that because it's the previous level of resistance. I'm not like pulling a magical number out of a hat or anything, but if we just kind of erase the Bollinger Bands, you'll see it clear as crystal. The market before it had that 30-something% move to the downside that we just measured. Notice what happened within that range. And you see this clustered area of price action. There was 2 touch points, okay? One there in September the 11th, okay? Interesting date there, right? In October 2012, 2 touch points, and that's all it took. Boom. The market just kind of almost, not necessarily collapsed, but it had a very substantial move to the downside after touching that 1783 level 2 times on the monthly candles. A break above and fail, and then a retest, and just a really nice move for the sellers who probably capitalized on the market. Okay, so here we are again, just kind of teetering around that 1783 level. Again, guys, if anyone tells you the 1783 level is nonsense, it's useless, yeah, you might want to really check their credentials, guys, because this is the most powerful level. It's the previous level of resistance 12 years ago, back in 2011. So that's why we dedicated a video on that level. So let's let this monthly candle play out. We have about 20 days to close on this active red monthly candle. Pull up your Bollinger Bands. Okay, I'm using tradingview.com. You're looking for that mean average line. I'm not sure what color it's going to be, but look for that mean average line on the monthly Bollinger Bands. If we get a close below the mean average line, okay? Let's see if I can pull up some numbers for you guys here. Close below that mean average line. Maybe it's going to vary, like if you're using a different exchange, but I think it's going to be the relatively the same, okay? The orange line is going to be at 1781, ironically, $2 away from 1783. Okay, so assuming that this line doesn't kind of go up a little bit more, because of course as the monthly candles are actively developing, opening and closing, the Bollinger Bands will reflect that in terms of kind of closing or or opening, and the mean average will be moving along with it as well. Okay, so that's pretty much it, guys. A lot. I feel like I said a lot here, but to kind of summarize everything, the only thing, I guess the most important level, I think is pretty obvious, 1783 in terms of what I see, okay? In my book, that is the most important level. 20 days to close on this monthly candle. If you see the buyers stepping in aggressively and they're breaking above 1783, but if they break above 1783, they must hold and make a new high, because the only thing that the buyers will be doing is creating the most aggressive impulse leg to the downside that you can imagine. Because if the market is destined to move lower, and then you have some amateur buyers stepping into the market thinking that they're going to change the trajectory when the big players are trying to move the markets down, and they're just kind of buying up the market, trying to push the price up, yeah, they're just making the impulse leg to the downside that much more dramatic. I'm talking a vicious move to the downside, because you can't try and I know some people, guys, when they're moving these markets, you can't stand in the way. They're moving the markets. You have to play the markets along with the banks or get out of the way. Okay, because if there's some guys picking up this market here and it's not ready to move higher, you can rest assured, man, that vicious move to the downside, $1,500 goal. Okay, that's where the lower Bollinger Band is down here. For now, right? I mean, that can change on the next active monthly candle, but for now, it's at 1552. Okay, $1,552 on the spot gold spot here. Okay, so let's let the monthly candle close, and then take it from there. This is not a bearish video. It's just a video pointing out that important level 1783. That is the only level. Okay. And that's pretty much how we're going to end the video. So yeah, I need more price action, guys, to determine anything. It's not a prediction video, just explaining this beautiful story. So hopefully you enjoyed that. So leave an appropriate thumb just below the video if you enjoyed the content. Leave a comment so that the YouTube algorithm can promote the video. If you're new, we also cover the crypto market, okay? 7 days a week. So kindly join us here on this interesting journey, and we'll see you that information when it's available. Guys, I appreciate your time. Be sure to execute your strategies in the market and kind of use this as education only, okay? Remember, keep that positive energy going, guys. You pass it to me, I pass it to you, you pass it to your neighbors, and we'll just change the world, and the whole world will be positive, right? Wishful thinking. Execute your strategies, okay? Always be kind. I said that. We'll talk soon. Bye for now.